You want to know the real key to making consistent, meaningful profits in the market? It isn't found in chasing every small fluctuation or reacting to every tick on the screen. The real edge comes when you learn to align yourself with the market's major directional shifts, the big moves, those moments when your mindset is steady, your perception is clear, and you recognize the opportunity before the majority sees it. That's where real success is born, not from grabbing a few points here and there out of fear of missing out. Most traders can't stand to wait. They crave action, movement, something to make them feel involved. But the need for constant action is the mindset of the trader who gives away his edge long before the market ever presents the true opportunity. Have you noticed that? They're always jumping in and out, reacting emotionally, fighting the market tick by tick. Then, when a genuine trend finally unfolds, they're either too exhausted, too fearful, or too stubborn to participate. That's the mental trap most traders live in, chasing noise, missing the signal. Here's the truth. A big market move doesn't happen without psychological preparation. The market communicates its intention long before the move begins, not through tips or predictions, but through structure and energy. Just as a builder must lay the foundation before constructing a house, the market lays down emotional groundwork before it reveals direction. Accumulation and distribution aren't just technical phases. They're reflections of collective belief and behavior shifting beneath the surface. Are you perceiving that emotional foundation? Or are you merely reacting to price the way a gambler reacts to dice? Most traders see a sudden burst of price action and assume a move has begun. But that's illusion. They get caught in emotional momentum instead of structural momentum. They enter impulsively, the move stalls, and they label it bad luck. But luck has nothing to do with it. They fail to see the underlying psychology, the groundwork of belief, commitment, and imbalance forming over time. Trading isn't about being quick. It's about being attuned. When I first began studying the markets, I saw people trying to outguess every move. They believed success came from cleverness or timing. But the traders who lasted, the ones who built consistency, all had one thing in common. They waited for clarity. They allowed the market to show them when the probabilities had shifted in their favor. Do you have the mental discipline to do that? Or do you need action right now to feel alive? The greatest destroyer of trading accounts is not poor analysis. It's impatience. Traders can't tolerate stillness. They get bored, feel left out, and break their own rules. How many times have you taken a small profit only to watch the market continue exactly as you anticipated? But without you? You blame the market, but the real issue was psychological discomfort. The big profits don't come from small, frequent wins. They come from holding your focus and trust during the big, obvious opportunities. The hardest part of trading isn't knowing what to do. It's doing nothing when nothing should be done. Most people equate trading with constant activity, but the best performers spend the majority of their time waiting for alignment between what they see and how they feel. Do you understand what I mean by the path of least resistance? It's not just a price level. It's the psychological path where fear and greed have reached balance and the market can move freely. When you recognize that state, you don't have to force trades. You simply flow with the market's rhythm. Imagine a stock drifting sideways for weeks. Most traders lose patience, call it dead, and move on. But beneath the surface, a shift in sentiment may be taking place. Quiet buying, diminishing selling pressure, increasing confidence. That's not boredom. That's preparation. The groundwork of belief before a collective realization. If you're mentally present and emotionally neutral, You'll see the stock begin to lift, not with noise, but with conviction. That's your moment. That's when probability tilts in your favor. The same dynamic applies on the downside. A stock rarely collapses without signs of emotional exhaustion. Before the fall, you'll see optimism fade, rallies weaken, volume shift. These are signals of distribution, of belief unraveling. To the untrained, it seems sudden, but to the emotionally disciplined trader, it's expected. Are you training your perception to see these transitions, or are you still reacting to surface-level movement? The real skill in trading is learning to distinguish random price action from meaningful change, to sense the difference between emotion-driven noise and probability-based structure. That ability only develops through experience, losses, and introspection. Every trader pays that tuition. But if you learn from it, if you learn to control yourself rather than the market, you'll separate yourself from the crowd. I remember studying a stock that seemed lifeless for months. No excitement, no headlines. Everyone dismissed it. But I noticed subtle shifts, resilience after every dip, persistent buying, quiet accumulation. I stayed patient. Then one day, seemingly out of nowhere, it started to climb, first slowly, then with energy. But I wasn't surprised. I had already seen the shift in probability long before it became visible. That's not prediction. That's alignment with the market's truth. Do you see the difference between reacting and allowing? Most traders chase visible movement. They respond to tips, news, or sudden volatility. They get shaken out because their decisions come from fear and desire, not clarity. But those who wait, who trust their process and understand the market's psychological cycles, they participate in the big moves before the crowd even sees them. The market doesn't hide opportunity. It reveals it slowly to those patient enough to observe without judgment. One properly executed trade, aligned with your edge and held through the complete move, can change your entire year. But the majority will never experience that because they can't surrender control. They demand certainty in an uncertain environment. They crave the dessert before the meal. And the market, being a mirror of human behavior, feeds on their impatience. Which side will you be on? The one that reacts to emotion, or the one that acts from clarity? Remember, the groundwork for every move, up or down, is always psychological. It's built during those quiet, uneventful periods when everyone else is distracted. The few who train their minds to see through boredom, to recognize subtle shifts in conviction, will always find themselves in sync with the market's next big move. That's the essence of mastery. Not prediction, but perception. Not control, but alignment. The market rewards those who understand that the real work isn't in chasing, but in waiting, patiently, consciously, for the probabilities to align. That move extended far beyond what most traders imagined. And I caught it from the very start, not because I predicted it, but because I respected the psychological foundation forming beneath the surface. Wouldn't you rather be positioned before the crowd than reacting after the fact? The foundation, or what I call the market's emotional groundwork, tests your inner state, your patience, your discipline, your ability to remain balanced when the environment feels stagnant. It's easy to act impulsively in moments of boredom, but it takes true mental strength to remain focused while the market prepares its next expression. That's why most traders miss the big opportunities. They can't handle the quiet phase. They equate silence with danger and movement with safety. So they trade to fill the emotional void, not because the market is calling for action, but because their own minds are demanding relief from uncertainty. And when the real move finally arrives, they're too drained, too overexposed, or too distracted to respond effectively. Have you ever done that? Taken profits too soon or walked away just before the real move unfolded? Think of this preparatory phase as the coiling of psychological energy. The longer it builds, the more powerful the breakout becomes. But if you fail to recognize this emotional compression, if you only react to the explosion, you'll always arrive late. The professionals aren't surprised by these moments. They're the ones who stayed centered and observant while the crowd lost focus. The groundwork is your signal. It's what separates foresight from hindsight. Without understanding it, you're gambling on emotion. With it, you're aligning with
Probability. Here's the truth. Every major market move leaves a trail of psychological footprints. Some are faint, some obvious, but they're always present. The market doesn't hide its intent. It expresses it through collective behavior, through imbalance and pressure. The crowd doesn't see it because they're reacting, not observing. They chase confirmation from others instead of trusting their own awareness. But if you slow down, if you allow yourself to see rather than react, the groundwork speaks. The trader who learns to study this subtle foundation always holds an advantage over the one waiting for news or validation. By the time information becomes public, the emotional energy is already shifted, and the move is well underway. Professionals act on perception. Amateurs act on confirmation. Wouldn't you rather operate from clarity than from consensus? The market always moves along its path of least psychological resistance. If you fail to recognize that path, you'll spend your time fighting trends instead of flowing with them. Think of water running down a hill. It doesn't fight obstacles. It finds a channel, an effortless route downward. Price behaves the same way. It seeks the space of least opposition, where belief, fear, and liquidity all align in one direction. Have you noticed how some markets rise with ease while others struggle under the weight of disbelief? That's the difference between alignment and resistance, between trading with the flow and fighting it. Every successful trade I've ever made was the result of identifying that path and trusting it. I didn't create it. I didn't control it. I simply recognized where the collective energy was moving and allowed myself to move with it. That's the real essence of trading. Not prediction, but participation. Are you listening to what the market is showing you, or are you too busy arguing with what you think should happen? The biggest mistake traders make is believing they can impose their expectations on an uncertain environment. They buy because they think something is undervalued or short, because they think it's too high, and then spend their time waiting for the market to prove them right. But the market doesn't care about your opinion, your analysis, or your reasoning. It moves according to collective perception and energy. If you stand against that flow, no amount of logic will save you. Have you ever held a position, convinced the market was wrong, only to watch it move further against you? That's not the market testing you. That's your ego refusing to accept reality. The path of least resistance is not just about price direction. It's about behavior, about how effortlessly a market moves in one direction compared to the other. A market that rises easily, shrugging off selling pressure and expanding on volume, is showing you that upward movement is where collective belief is flowing. You don't need tips or rumors. To see it, the tape itself reveals the story. Conversely, when a stock falls sharply on minimal selling and can't sustain rallies, the energy is downward. That's the line of least resistance. Trading becomes simple once you stop arguing and start observing, but it requires emotional maturity to accept that simplicity. Most people would rather defend their opinions than adapt to reality.
They want to be right more than they want to win. They'll fight the market's flow, rationalize losses, and ignore what price is clearly communicating. But the market doesn't engage in arguments. It expresses truth through movement. The trader who can surrender the need to control and instead align with that truth will always have an edge. Let's take an example. A stock breaks out of a long, dull range. Each pullback is shallow, each rally stronger, volume expands, resistance fades effortlessly. The path of least resistance is upward. The market is telling you where it wants to go. The emotionally disciplined trader buys with conviction. The reactive trader shorts it, believing it's gone too far, and gets crushed. How many times have you seen that? And how many times have you been that trader? The same logic applies in downtrends. A market that feels cheap can always get cheaper. What appears undervalued is irrelevant if the emotional flow is still negative. When every rally fails and selling pressure dominates, the path is down, and the rationalization of value becomes a trap. Haven't you bought something because it looked cheap, only to watch it fall further? That's what happens when you ignore the flow of collective energy. The key is to stop thinking in terms of what should be and start observing what is. The market is a reflection of all participants' beliefs in real time. The professionals act when they see the imbalance forming, not when they can explain it. Their activity creates the current, and the tape records it. Your job isn't to understand every reason. It's to recognize the flow and position yourself with it. That's how you catch the big moves before they become obvious, by perceiving alignment before the crowd does. Would you rather fight the current or ride with it? One of the hardest lessons I learned was to stop anticipating turns before they existed. I used to pride myself on calling tops and bottoms, but that was ego disguised as skill. The market doesn't reverse because you think it's time. It reverses when the psychological structure changes. Until that shift appears, the existing path remains intact. Your task isn't to predict. It's to observe patiently until evidence of change appears. Have you been guilty of jumping early, trying to outsmart the turn, only to watch the trend continue without you? Patience isn't passive. It's the discipline of clarity. Rushing clouds your perception. But when you wait long enough for the market's character to reveal itself, the line of least resistance becomes unmistakable. Think of a river. The current doesn't reverse because you command it. It changes only when nature alters its structure. Until then, the water flows effortlessly in one direction. The market behaves the same way. It continues along its chosen path until internal forces shift. Your role isn't to guess the storm. It's to recognize when the current begins to change. That's a far more intelligent way to trade than fighting against what's natural. Respecting the line of least resistance protects you from stubbornness. It stops you from clinging to losing positions. If price moves easily against you, the market is speaking, and your only rational response is to listen. The traders who ignore these signals pay dearly. They were right for a time, but when the flow shifted, they refused to adapt. They held on, hoping instead of observing, and lost everything. That's why the most valuable skill in trading is to identify and honor the line of least resistance, not only when it works for you, but especially when it turns against you. The beauty of this concept lies in its simplicity. You don't need to know why the flow exists. You don't need to decode every piece of news. You simply need to recognize how easily the market moves in one direction versus the other. That's the collective mind expressing itself. Isn't it wiser to flow with that energy than to fight against it? And remember, The dull, uneventful phases are often where the next great move is quietly being born. Most traders can't handle the silence. They crave stimulation and confuse it with opportunity. But the market's biggest truths live in boredom, in the quiet accumulation or distribution that precedes motion. If you can train your mind to stay patient and emotionally neutral through that silence, you'll see what have you noticed, how the biggest, most powerful market trends often emerge from places everyone has already forgotten. That's no coincidence. That's the psychology of the crowd at work. The market lulls people into emotional sleep. It bores them, makes them restless, convinces them that opportunity is gone. The tape slows, volume dries up, and the collective belief is that nothing will ever happen again. But beneath that stillness, energy is building. Quiet accumulation is underway. The traders who truly understand market dynamics aren't chasing excitement. They're positioning themselves while everyone else is distracted. That's the irony most traders never grasp. Boredom, which they avoid, is often the purest signal of preparation. If you have the patience and mental balance to stay present in that quiet, you'll often find yourself aligned with the next major move before anyone else even notices. When I first started trading, I made the same mistake every new trader makes. I confused movement with opportunity. I thought the quiet meant nothing and the noise meant action. I'd abandon slow markets to chase fast ones, only to lose where emotion was loudest. Time and again, I watched the dull markets I'd ignored make the very moves I'd been waiting for. It took years of emotional pain before I learned the truth. Boredom is not the absence of opportunity. It's the buildup of potential. Think of a quiet market as a coil tightening. It's silent, it's still, but the energy is compressing. When it releases, it's explosive, not because something new appeared, but because something long hidden was finally expressed. That's how markets work. They store emotional and psychological energy during periods of inaction. And when the imbalance tips, it's released in a wave of movement. The crowd, always asleep during the buildup, wakes up only when it's too late, buying at the top, selling at the bottom, reacting instead of observing. Have you ever seen a stock move after months of nothing and thought it came out of nowhere? It didn't. It came from that silence you couldn't stand to sit through. That quiet wasn't emptiness, it was preparation. The market was aligning energy beneath the surface. The strong hands were patiently accumulating while the impatient lost interest. A quiet market is the ultimate psychological test. It measures your ability to stay emotionally neutral. Most traders can't. They crave stimulation. They force trades to feel alive. That's why they lose. They can't stand being still in uncertainty. But the trader who can observe the quiet without the need to act has mastered one of the hardest mental disciplines in this business. That's the trader who's ready when silence turns to motion. I remember watching a stock that went nowhere for 6 months. Everyone called it dead. Brokers stopped mentioning it. Traders mocked it. But I noticed something subtle, consistent, quiet volume. The kind of flow that doesn't disappear even when nothing seems to happen. That told me something was shifting. So I waited. People laughed, but one day the stock started climbing. No fireworks, no headlines, just steady strength. That was the beginning of a run that went 20 points. The same people who mocked the boredom chased it later. Too late. I caught it because I respected the psychological rhythm of the market. The silence before the storm. Wouldn't you rather be in early like that? Positioned calmly before the crowd wakes up, than chasing after them in chaos? The same truth applies on the downside. Markets drift sideways before collapsing too. That apparent calmness? It's distribution. Strong hands unloading while the public feels safe. When the selling is complete, the breakdown seems sudden, but it's been developing for weeks. If you've ever held a stock that seemed steady one day and crashed the next, that wasn't randomness. It was groundwork disguised as stability. The market loves to hide its real intentions in boredom because boredom blinds the emotional trader. That's why you can't judge opportunity by how active something looks today. You have to read character, not excitement. Does a stock hold firm when it should be weak? Does it quietly resist decline when others fall? Or does it drift down despite strength in the broader market? These subtle shifts in behavior are where the truth hides. The quiet tape is whispering, but only the calm mind can hear it. Most traders don't want to hear this. They want constant excitement. They treat the market like a game instead of a reflection of belief and emotion. But trading isn't about stimulation. It's about consistency. The excitement costs money. The boredom earns it. That's the paradox. The traders who crave thrill pay tuition to the ones who master patience. Haven't you noticed that? The patient ones catch the real moves, while the restless ones keep missing them. It takes a rare temperament to embrace a quiet market, to understand that stillness is not stagnation, but gestation. Every long consolidation, every tight range, every dull period is psychological compression. It's the market storing energy until one side's conviction overwhelms the other. If you've trained yourself to read subtle shifts in behavior, when quiet firmness becomes steady strength or when dull stability becomes heavy weakness, you'll recognize when the pressure is about to release. But if you walk away because you're bored, you'll miss the entire transformation. Wouldn't you rather be quietly prepared than loudly late? The public always says nothing's happening, but something is always happening, under the surface, where conviction forms. The strongest moves are born in silence because silence allows professionals to act without interruption. The crowd avoids boredom. The professionals hide within it. When you learn to look beneath that mask, you'll find your greatest opportunities. The tape teaches this lesson endlessly. What looks lifeless is rarely dead. It's alive with subtle, deliberate activity, positioning, preparation, alignment. If you dismiss it as meaningless, you'll be blind when it awakens. But if you treat it as the incubation stage of a move, you'll be ready to act when it breaks free. Which side will you choose when the silence ends? And never forget, news follows price, not the other way around. That's one of the oldest truths in trading psychology. And yet it's the one lesson most never internalize. The crowd waits for permission, for headlines, for validation, for someone to tell them it's time. They cling to external information because it feels safer than trusting their own perception. But by the time news arrives, the move is already underway. The professionals were in before the story ever reached the paper. Have you noticed how a market starts moving days before the headline explains it? The story is never the cause. It's the narrative built afterward to justify what the tape already showed. I learned that the hard way. I used to chase news thinking if I got the information first, I'd get the profits. I devoured tips, watched financial reports, acted fast, and lost repeatedly. Why? Because the news was the illusion of control. The real information was already in the price. By the time you read the story, the professionals have already acted. Their activity creates the move that journalists later explain. The crowd chases explanations. The trader reads behavior. The tape always tells the truth first, quietly, subtly, and without fanfare. A market doesn't rise on volume for no reason. Someone knows something, someone is acting, and when they're finished, the headlines will appear to rationalize what's already done. That's why the traders who succeed don't trade the news. They trade their perception of the market's underlying psychology. They know the story comes after the movement, not before it. Once you internalize that, you stop reacting and start reading. And when you can read without emotion, without needing confirmation, you'll find yourself ahead of the crowd, where the real opportunities always begin.